Tax Goddess community. We are on a mission here to hit 100,000 subscribers, but we need your help. What we've noticed is right now about 81% of you are watching our videos, but you're not subscribed. If you're enjoying the content and finding value in it, please hitting the subscribe button would make a huge difference in our channel. It would help us grow and reach more people who desperately need our tax strategies to keep their money in their pocket, just like you guys. So it only takes a click and it continues to help us bring more of the content that you love. Plus, of course, don't forget to like and share for anyone that could benefit from the tips that we provide. Thanks so much for being a part of the journey with us. Hey everyone, it is yet another day with another One Big Beautiful Bill tax tip. Now, this one I'm super excited about because there was supposed to be a sunset provision on something called the QBI, Qualified Business Income. And the QBI gave an extra 20% tax deduction right off the top of any profits from flow-through businesses that you had. So if you had S-corps or partnerships or LLCs that were taxed as pass-through entities like an S-corp or partnership, you were getting an extra 20% deduction right off the top of your income, which was, well, net profit, but still absolutely awesome. Now, one of the things that I'm in love with from the BBB, the Big Beautiful Bill, is that this income tax deduction was made permanent, okay? It was supposed to sunset, but this is now permanent. And it also, which knocked out a bunch of people previously, it increased the taxable income phase-in range for the limitations, which means that some of our higher income taxpayers can now claim an even larger deduction. Okay, so one of the things that I really, really love about the BBB, and there's lots of things, you know, some people love it, some people don't. You know, for me, it's all about the details, right? Give me more details. So really, when we're talking about this QBI, what are these phase-in deductions? What are the numbers? Now, this extended, so 20% is 20%. It's 20% right off the top, okay? I want to talk about the extended phase-in range. So for businesses with high income, the QBI deduction can actually be limited or completely limited or even eliminated. So that new phase-in range being larger is going to be amazing for our business owners. Now, one of the things that you have to have here is you have to, oh, my puppy is excited as I am about this, right? You have to be what's called a flow-through entity. So you have to be an S-corp, you have to be a, you know, you've got to be, sorry, guys, hi. Distracted. You've got to be an S-corp. You have to be a partnership. You have to be an LLC, taxed as an S-corp or a partnership or a Schedule C. All of these entities, these pass-through entities where you are personally reporting the final net income number on your personal tax return, those are going to qualify for the QBI. Now, I want to break down these changes. Okay, so the effective tax years beginning after December 31st, 2025. So this is under the previous law. The phase-in range was 50,000 for single or 100,000 for married filing joint. With the new law, that window expands to 75,000 for single filers and 150,000 for married filing joint. So basically, this widens the band over which the taxpayer can claim whether it's all of the QBI or a portion of the QBI. Now, this is really very, very helpful for those specifically in SSTB businesses, specified service, trade, or business, SSTB. Those SSTBs like law, accounting, consulting, health, and there's some caveats here in health. So for example, fitness gyms don't count, but a doctor's office does. Definitely double check with your preparer and your strategist on who qualifies for the QBI and who doesn't, okay? But if you're in an SSTB, one of these specified service trade businesses, this will expand your band and allow you, hopefully, to take all, if not more, of your QBI deduction. Okay, so guys, if you have questions, you know, we get this question a lot. Shauna, should I be an S-corp or a sole proprietorship? Should I segregate businesses? Should I have a C-corp or an S-corp? If you have a C-corp, the QBI doesn't count for you. There is no QBI for C Corps, and that's because they have a 21% flat tax rate anyway. So they don't necessarily need, that's why the flow throughs got this extra 20%, was the government was trying to make things more even, right? So C Corps and S Corps came out, depending on how much you make, approximately the same from that standpoint. So one way to look at this SSTB is that if you want to get double the benefit, consider having two entities. Have a C corporation and an S corporation in which you can get QBI. Okay, so as usual, guys, there is a million ways to skin the tax cat. It's a terrible phrasing, but anyway, there's a million ways to get deductions, and that's what we do here at Tax Goddess, right? Our job is really to help you understand what are the options, how do we make sure that you're getting all of those options, and how do we make sure that you have a custom blueprint for your business that can actually help you reduce your taxes. I do have to say, it's one of my favorite parts of my job, right, is our average tax rate for our clients is 6.92%. And depending on how you're structured, what kind of businesses you have, are you in real estate? Do you have an operating company? Are you an S Corp, a C Corp, a partnership? All of these things change how all of the strategies work together. So having a comprehensive plan, an actual structure, a laid out path on which strategies do you want to use. There's well over 1,800 tax strategies in the tax code, deciding which ones apply to you, how to use them, which entity is best for you, and of course, getting it actually implemented. Those are all things that Tax Goddess helps our clients with, right? Our job is to be a strategic tax coach and coach you through what you need to do, when you need to do it, how you need to do it. Basically, it sounds like how many burpees you need to do to get that fit, athletic, tax, well-structured business. Okay, it was a terrible, terrible analogy, but I'm trying. So if you guys have questions, if you are looking for help, please, please, please don't let outdated tax structures drain your profits, okay? C Corp can be good, S Corp can be good. If you are looking for QBI, reach out. This is what we do. Call the tax team, call Tax Goddess, and get an appointment with us, and let's see how we can help you. All right. Have a wonderful day, y'all, and can't wait to talk to you soon. All right. Bye.